Today I'm going to share with you the most accurate 1-minute scalping strategy, and the best thing about this strategy is that it does not require a lot of experience and it will make you huge and consistent profits. And also it works on all the markets including Forex, crypto and commodities. So without any further ado, let's get started. But before we get started, please make sure to subscribe to this channel, as this channel is currently new and I'm trying to post consistently, bringing you new strategies and indicators every week, and your subscriptions are a great motivation for me. First of all, let's go ahead and change the time frame to 1 minute. This strategy also works very good on 5-minute and 1-hour chart, but in this video I'm going to backtest it on 1-minute time frame. Now let's go ahead and add the indicators we're going to need to perform this strategy. So let's go to the indicator tab, and here we're going to search for EMA and we're going to add 2 of these to a chart. Also, let's go ahead and add the stochastic to the chart. And the third indicator that we're going to use is the sessions to the chart. So now the indicators have been added. Let's go ahead and change the settings of these indicators. So first of all, let's go towards the indicator settings of EMA, and inside here we're going to change the length from 9 to 50. Now also we're going to go towards the style and we're going to change this color to this, and also we're going to increase the line thickness. Now let's go towards the EMA2 and we want to change its length from 9 to 150, and also we're going to change the color of this line and increase its thickness. Now let's go ahead and change the settings of stochastic indicator, and inside here we're going to go towards the indicator settings and we're going to change all these parameters to 6. And the last and the final change that we're going to do is in the sessions chart, and here we're going to deactivate the Tokyo sessions, because in the London and New York sessions this strategy works very well, and most of the market activity is during the New York and London session. Now that the indicators have been set up, let's talk about the trading rules for taking short positions. The first rule is that the 50 period EMA should be below this 150 period EMA, as you can see in this case here. The second rule is that the market should pull back into this area between this 50 period EMA and 150 period EMA, so it can either touch it or even cross it, but it should not break the structure that the market is making in the formation of these lower highs and lower lows, because as you can see here, there is a formation of these lower highs and lower lows. So market should continue to pull back into this area, but it should not break this level, because this will break this downward structure. So let me just forward play the market, and as you can see here, the market pulled back into this area, but it did not go above this previous lower high. So this is the third condition, and the next condition that you need to check is the price should be in the overbought region, because then the market will be shifting its momentum from buyers to sellers. So these are the rules that you need to check. And the last rule that you need to pay attention to is that the market should close below this 50 EMA, confirming that now the sellers are in control. Once these conditions are met, we're going to take our position at the close of this candle. So we can put our entry at the close of this candle here, and we'll put our stop loss at the last swing high, and we can target the 1.5 risk to our ratio. So as you can see here, our take profit level has been hit. So this is our trade of 1.5 risk to our ratio in profit. Now let's take a look at another example. As you can see here, there is the 50 period EMA is below this 150 period EMA, so our first condition has been met. The second condition is that the market should pull back into this 50 and 100 period EMA. So let me just forward to the market, and as you can see, the market did pull back into this area here, and also the market did not break the structure that was forming, that the formation of the lower highs and lower lows. As you can see here, the continuous formation of lower highs and lower lows. So the downward trend is still in continuation. And the next thing that you need to check is the market should be in overbought condition, as you can see here. So the momentum is shifting from the buyers to sellers. And the last and final thing that we need to pay attention to is that the market should close below this 50 period EMA, indicating that the reversal of the momentum. So we can put our entry at the close of this candle here, and we can put our stop loss at the last swing high, and we'll be targeting 1.5 risk to our ratio, which you can see goes here. So our 1.5 risk to our ratio is met, but let me just forward play the market to show you how well this strategy works. So as you can see, with the momentum shifting towards sellers, there are the impulsive moves in the bullish direction, and with strategies that allow you to take high risk to our ratio trades, you would have been able to take trades of even 30 risk to our ratio, which is phenomenal. Now that you know about the rules for taking short positions, let's go ahead and talk about the trading rules for taking long positions. The first rule is that the 50 period EMA should be above the 150 period EMA, which is this condition existing here, and also the market should pull back into this area between the 50 and 150 EMA, but it should not break the structure that is forming in the continuous formation of these higher highs and higher lows. As you can see here, there's a continuous formation of these higher lows and higher highs. So this formation tells us that there is the bullish trend in the market, and the next condition that you need to pay attention to is that market should be in oversold conditions. So let me just play the market. As you can see here, the market pulled back into this area between 50 and 150 period EMA, and also the market conditions are in oversold, so the momentum is shifting from sellers to buyers here. And the last thing that you need to pay attention to is market should close above the 50 period EMA, so we can put our entry at the close of this candle, and we'll be putting our stop loss at this low here, and we can target 1.5 risk to our ratio. So let me just go ahead and put our stop loss, and let me just go ahead and adjust our take profit. So as you can see here, there should be our take profit, and if I follow the market, you can see that our take profit has easily been hit. So this is how you can take the long positions using this scalping strategy. Here is another example of how you can take the long position. As you can see here, the 50 period EMA is above the 150 period EMA, so the overall trend in the market is in bullish direction. And also we want to look for the formation of continuous higher highs and higher lows. So you can see that there is a formation of these higher highs and higher lows. And next, we want to look at the overall conditions in the market. So let me just follow the market. The market pulled back into the 50 period EMA and 150 period EMA right here. So we can, at this time, we can see that the market is in oversold condition, and also the market closed above this 50 EMA. So we're good to take a long position at the close of this candle, and we can put our stop loss at this last swing low. And also you can see that there is the continuous formation of these higher highs and higher lows. So this condition in the market tells us that the market is in bullish trend, so we can go ahead and put our entry at the close of this candle, and we can put our stop loss here, and we'll be targeting 1.5 risk to our ratio. So let me just adjust this take profit. So as you can see here, if I play the market, our take profit level has been hit, and this strategy has again given us a risk to our ratio of 1.5. But if we use some high risk strategy and also target this scalping strategy, we can take even the risk to our ratios of almost 7, which is again very phenomenal. Another cool thing about this strategy is that it works really well when the markets are in high or impulsive trend. For example, here you can see that there's continuous formation of these higher highs and higher lows. This shows us that the market is in bullish trend. So as if we go ahead and take some example trades here, for example, here you can see the market pull back into this area, and also the market is in oversold condition. So we can take a long position at the close of this candle, and we can put our stop loss at this last swing low, and we can target 1.5 risk to our ratio. So as you can see here, our 1.5 risk to our ratio has been met. So this trade was a profit. And also if we go back a little, we can see that there is again the market is touching this, but it did not go below this into this area, and we should not take this trade. And here, as you can see, the market is ranging, so we will avoid taking this trade as well. And also in this case here, you can see that the 50 period EMA was above the 150 period EMA, but when the market pulled back into this region, it broke this level. So we will not consider this trade because the market is breaking this level of this previous higher low. So this is not a confirmation of the continuation of a bullish trend. Because we are using the scalping strategy in a trending market, we want to make sure that times when we take the trades, the market is in impulsive trend, so that our trades go through and we get the volatility that we need in order for fast execution of our trades. I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, I'll be bringing you new strategies and indicators every week. So when you're subscribed, you'll automatically get notified whenever I upload new content. See you guys in the next video. Thank you.